We are currently in an environment where still bad news for the economy is good news for the market. But unfortunately, the good news for the economy is obviously in reversely a bad news for the market. So the market was very complacent at start of the year, thinking there'll be a pivot. Now the data has come in stronger and the Fed has changed what they said. So we got a big rally in January and February, but right now doesn't mean it should be a reversal that may erase previous rise. Today is 21st of February, and I'm very glad to welcome you here. So it's another episode of Blockrevision, your daily dose of updates on crypto, stocks, commodities, and other most important elements in order to become a profitable trader or investor. Without any further ado, let's head on to another episode. Alright, so at first let me know whether everything works fine, as I had some audio quality issues back in the past, so your information will be kind of helpful. Alright, so we are heading to a first element, that's a economy view. That's the first section we would like to spread in today's episode. And for this one, at first, let's head on to what's going on with interest rates, as recently, due to that better data than forecasted, we are right now facing a probability of hiking interest rates even faster than it was supposed by the market. So let's have a look at first at target rate probabilities for 22nd March, when there will be a Fed meeting. So the market is starting to expect in a higher odd notch that the next interest rate hike will be of more than 0.25 points. So it means that the market is shifting and repolarizing into more like a hawkish tone from the Fed. So market is getting gradually more spooked by that data that are inflowing the inflowing the economy. So the state of economy. So it's right now 79 to 21, but back 1.5 week ago there was only few percent tipping on that it will be 500 to 525. So that's the radical change, and it may even change more to the low probability outcome right now. Goldman also sees Fed hiking by further 75 points on stronger growth, and there was a stance where we can find that they don't think that necessarily breaks the trend toward disinflation, but they think that it reinforces the idea that the Fed still has work to do. So they think another 75 basis points from here, with no cuts until 2024, seems like more likely outcome, and that's something that market is really fierce of. So 0.5 right here in March is more and more more likely to be debatable this month, and by 22nd of March. So that's out of Goldman right now. Let's find out what we got next. So I will get you to market outlook section, and as always in market outlook we are looking through the most important chart. But before we head into this, I will get you updated with some very interesting charts. So at first, the question is whether we are still in a high valuations in terms of different gauges environment. So Nasdaq 100 is right now at P and uh, price and sales, price to sales ratio somewhere around four units, and this in this chart. But as we can find, we are right now have been corrected out of this cosmic levels. We called it from late 2020 to early 2022, and right now this abrupt increase in market liquidity is getting us back to 4 points. But it doesn't mean that quantitative tightening has ended. And right now, the QT will be led throughout the whole year, and even to some extent to 2024, depends on what the stance of economy might be. So US 100 right now, may, even though it's below its 10-year average, and at the same time it's still high in terms of its longer period of time. So I haven't finished that line, but what I meant was that in a longer time horizon we are still overvalued. But in regards to what was back during this last 10-year period, that this time might be an opportunity. This evaluations might be an opportunity. But whether we are betting on having the same decade as the past one, or rather are we adjusting to that what was during recent 50 years, that will determine what your investing decisions, whether you are more bullish towards this decade or bearish. Let me know in the comments below, and or you may ask any questions you like live. So it was about price to sales of US 100, about speculative mania. So recently we've risen by 20% from October lows on MSCI ACWI index, and right now we are more likely to morph into a speculative frenzy right now, as those valuations with that high inflation are really off the chart. Historically, equities don't typically bottom before the Fed is advanced with cutting, and we never saw a low before the Fed has even stopped hiking. So the central bank may likely pivot only in response to a much more negative macroeconomic backdrop than markets are currently expecting. Will we drop right down to 600? Yes, it's possible. The correction is of a high likelihood, especially with this very sharp rise during a recent attempt of beating this medium-term highs. So always when it's a very sharp rise, that is kind of a liquidity grab behavior of a market, is giving us a likelihood of having a much more stronger correction back downwards, as that's the normally place where most and biggest market makers are just putting their money against some trades. So this time, unless we find a very nice and quick correction around those levels, I would rather bet to having this MSCI world dropping to at least 600, and right after we'll find out what's the reaction right there. So it was about this, and another thing that also is pushing me toward this stance that the corrections in the air is this prevalence of calls ratio to puts. So 0.67 is the spot when we have previously been registering throughout or even that calm period was back only in October of 22, right before the correction eventually started. So sorry, it was back in September, especially, as October was the one when this volume started picking up. So right now it might be an equivalence of what happened back in September. So it's a widespread optimism that's always in a much more bearish market and harbinger of something worse that may happen soon. Right now, let's head on to our charts and let's find out what's going on with SPX. We've already talked a bit, and we have a real problem with building a floor around this level of 4060. So on SPX, especially with this gap down, I would rather bet that it's a much more likely to having this drop down to 40 hundreds, and right after it will be a key whether we manage to stop right over there at 3900 as out of the daily standpoint. Getting back right here will break the current market structure on a daily basis. Also, on a weekly, the most important stop is right here. But right after, if we just get through this downtrend line, it would mean that the higher likelihood of a major sell-off is increasing, as we may get right back once again inside of this structure of a market. So RSI is right now pointing we might be ahead on right ahead of a major slump, as we are right now on a weekly basis have crossed 50 basis points. So after such a long and bearish period, it will be much more desirable to have this sell-off around those levels, somewhere around, especially when those optimism has arisen to that extent. So that was SPX, and we may head on to another very interesting chart right after crypto outlook. But what about cryptos right now? So crypto has had a positive time, but right now we have a real struggling. We are struggling to large extent with this horizontal line. We are touching this price, and as every time it's look at these sell-offs, those are small impulses that right now possibly maybe a harbinger of having another very strong yet soon. So even though you may find it's a ascending triangle I don't like this price action. All right, so every time it's heading to its ceiling, it bounces that fiercely that wouldn't consider this as a valuable formation of the upside, especially after hitting this ceiling on 2500s that fiercely. Usually that very quick market reactions, that very sped up acceleration toward the ceiling normally is forecasting something bad to happen on the market, especially with this RSI having a bad, very bad um, behavior of lately. So that's BTC USDT. But what about the news? So when we are studying the medium term price behavior, I'm more bullish than bearish. All right, even though in smaller time horizons, it's more likely having its downside momentum. So what about crypto? Hong Kong plans to let retail sector trade larger crypto tokens like Bitcoin. So right now, as we can find, Hong Kong outlined a plan to let retail investors trade digital tokens like Bitcoin and Ether, taking a major step toward its goal of becoming a crypto hub in a policy shift that contrasts with a crackdown in the US. And another thing is the consultation period will end on March 31 about the regulation that may come up, and the objective is to allow retail trading in the new licensing regime for crypto exchanges due on June 1st. So that's amazing news for crypto investors, especially that also what is favoring from Winklevoss mouth, that he finds that Asia will be behind the next bull run explosion. And we can find also that what he said was it will be humbling reminder that crypto is a global asset class, and that the West, really the US, always only ever had two options: embrace it or be left behind. So will Asia be right now on the brink of a return to this cash cow sector, as somebody calls it, as cryptocurrency cannot be stopped, and everyone that wanted to just crack down on investment in this sector will be left behind sooner or later. So that's the question that's right now is finding out to having its trajectory, where we can find there's a more likelihood that Asia will catch on to this bandwagon rather sooner than later. But let me know in the comment section or in the chat what you think about it. Right now, China has expelled these crypto miners, but possibly the market will recover, and it starts just from Hong Kong and may have its widespread phenomenon, widespread effect toward the other regions in the mainland China. So that's about crypto, and we are right now heading to